Good morning. Happy Monday. Happy new week of the trading world. Obviously, we got a new weekly print on crypto about 6 hours and some minutes ago. About 6 hours ago. And yeah, what happened right before the weekly printed? Started to have the little move to the downside, right? And then as the new week began, the new weekly time frame began, the assets just kept moving down. Bitcoin, Solana, a whole bunch of them moved down, right? They've been having a little bit of a sell-off, a little bit of a take profit event. Writers are already furiously writing, "Oh, crypto crashing." Why? Because you saw a 9% move or a 5% move. Give it up, right? Solana dumping from whatever it was at 250 to 225 or so. That's just a discount, right? That's just a discount to acquire more cheap Solana. That's a profit taking from the top on divergence, right? You look at the low time frames, you can see some nice little divergence plays there between the returns oscillator and the price action. Same on Bitcoin, by the way, right? When those dumps started to happen, they were divergence plays. And if you've been trading both of them at the same time, you would have shorted both of them at the same time. This should not come as a surprise to anybody who's trading low time frames, right? We see these volatile assets move in these amounts to the upside and the downside fairly regularly. By the way, this is a great setup for this new week, right? Why? Well, look at the new weekly targets. Look at the new central weekly range, the new central daily range, of the VRE. Look at the new daily Laplace levels, the new normal levels for the daily. Look at the new 4-hour levels. This is setting up to be a banger of a day, even more than it's already been, because the market comes back today after a weekend. I mean, the traditional market, yeah. Obviously, the market in crypto runs 24/7, but there is very often when the traditional market comes back from a weekend, right? And sometimes it happens when the CME futures open on Sunday, for like an hour or two or whatever. Sometimes you see some very nice movement on crypto. Pretty much, arguably, you could say that's what happened yesterday, right? Like right after the CMEs were opened, and then before the new weekly, or as the new before the new weekly printed, because it was already falling, right? Before the weekly opened up on crypto. So in that little gap of time, yesterday was an example. If you get some nice movement when the CME is open, doesn't matter which direction, you get nice movement sometimes. Not always though, but sometimes yes. And then Monday comes along, and in the run up to traditional market open, you'll typically have some nice moves. By the time we start our live stream at like 11 a.m. U.S. Eastern Time, right? You've already had traditional market open. You already had that initial hour and a half or so of trading, and suddenly you're in the heart of the day, where you're going to either see more continuation one side or the other, or going sideways a bit. But usually it's not boring in the first several hours of the trading day, right? Especially on a Monday, right? You come back from the weekend and you get all this eager traders looking to open up positions for the week. And that's exactly what they do, right? They open up their positions and they hope they're on the right side of the trade. Now, of course, if they're trading with lagging information, they're probably not on the right side of the trade. If they're trading with leading information, then there's a higher probability that they are. So the question is, what are you trading with if you're trading? Are you trading with lagging information or are you trading with leading information? If you're trading with lagging information, my question to you is why? What are you trying to prove? Are you trying to demonstrate that you can figure out how to make lagging information work better than the 99% of traders for whom it does not work? Because if you think that that's you, I'd love to see it happen, right? I'd love to see if you could come in to our Discord and actually demonstrate that your lagging information works somehow as well or better than our leading information. I'm not saying you can't do it. I'm saying I challenge you in a friendly way. Come into our Discord with your lagging information, in the public channel even, and show us that your lagging information is somehow better than our leading information. We've been at this for a long time. Hello there, I see you. Top is in. It's very funny. Top is in. You're hilarious. There is no top, there is no bottom. Assets distribute away from the mean of returns, and assets mean revert to the mean of returns. That's all there is. That's all they do. Okay. When you say top is in, I don't know what you mean, because it sure seemed like it was higher last night than it is now. So you're saying yesterday's high was the high? Well, it was higher than that some days before. And if you think it's not possible for assets to go back up above where they were, I don't know what to tell you. Learn a thing. Like, assets can certainly go higher, right? And this particular asset sector, this asset class, has demonstrated that over weeks, months, and years, it has a tendency to go higher. Right? But we don't care as low time frame traders, okay, about where the asset is or where it's going up or down. It should not matter to you, if you're trading properly on low time frames, whether the asset moves up or down. It should matter to you only that you are on the winning side of the trade and that you take your profits fast, early, and often. Right? Don't stick around waiting for example, yesterday, perfect example, right? You want to say the top is in, great. Did you take your profits when it was at the quote unquote top? No. Did you short when it was at that top? No. Why? Why didn't you short when Bitcoin was at 105? Why didn't you short when Solana was at 250 or above, 256? Why? Right? And if you did, why did you stay in the trade longer than 15 or 20 minutes if it was going to go bouncing around, right? It's that's why trading is a short time frame game. It's not the same thing as investing, right? At all. I mean, yes, technically you're using the money that you have to invest in an asset on the market, and then you're hoping to earn returns on your investment, right, over time. It just matters. It's a difference of how short or how long that time is. Are you waiting minutes, seconds, hours, days, weeks, months, years, decades? Right? That's the key difference, but it is a significant difference because a lot can happen in decades or years or months or weeks or even days, more than can happen in like a split second. And a lot can happen in a split second too. So just imagine how much can happen in all those higher time frames. Which is why, by trading lower time frames, you generally reduce your risk as a trader. Okay? Especially if you trade properly without using ridiculous leverage. And if you don't put in stop losses, which are just idiotic things to put in because you're just telling people, you're telling the market where your money is. And that's not a very useful thing to do, right? That's a very unwise way to literally give up control of your capital. And by give up control of your capital, I mean it's a very bad way to lose your capital. It's to use leverage and stop losses. Because all leverage does really, in theory, you can make gains faster, but you can also make losses faster. And all it does is squeeze the amount of error you can make before you hit your pain point and decide to close your trade, or you stupidly think, oh, I'm going to ride or die, and then you get liquidated and you lose all your money on that trade, which is just incredibly stupid behavior. But people do it all the time. I don't advise it. The reason I don't advise it is because you could lose all your money. I love that you're saying top is in, man. That's hilarious. No. This asset has been moving very nicely for 16 years. Has been delivering more than like 14, 15 billion% returns from the time it was at its lowest, like at zero, back in 2009, when it was literally free. It's gone up to insane percentages of returns, and with the kind of volatility never seen before in any other asset class over an extended period of time. Now you can say, well, there's other assets that are more volatile than Bitcoin now. Sure, because they're not as liquid and they're much smaller. And yeah, there are. You can find more volatile assets in the short term. But go look at those coins in 5 years, 10 years, see if they're still around. And try to tell me if they were as volatile as Bitcoin was in 2009, 2010, 2011. You won't be able to. Okay, so yeah, any coin can have a good run for some days, weeks, or months, or even a year or two. But it's generally not going to outperform the volatility that Bitcoin has delivered now for more than 16 years, right? And it's far from stable. People like to joke crypto is like, crypto's 16 years old. They're already joking about it, like when Bitcoin was like 12 years old, they're already saying, oh, Bitcoin's old. Bitcoin's not old. Bitcoin is 16 years old. That is not old. It's not even a world reserve currency. It's not even, it's not even the world reserve currency. It's not even, the main thing in the fiat system. It's not fiat, obviously, but like it hasn't yet beaten fiat, right? Once it takes over fiat, then maybe we can have this discussion. Anyway, for now, that's going to do it. If you want to see us doing some very nice market starting at 11 a.m. US Eastern Time, hop on into the Alpha Trading Discord. That's at alphatradinghq.com/Discord. And hopefully we'll see you guys there. Again, it's at 11 a.m. US Eastern Time. And That should be it for now. Happy trading. Cheers.